Will the Fed crash the market? They're about to give us the summary of economic projections tomorrow at 2 o'clock in the afternoon, so 2 p.m. Eastern time, followed by Jerome Powell speaking at 2:30 Eastern time. Are we going to get hawk? Are we going to get dove? Are they going to talk about economic weakness or strength? Are they going to talk about weakening labor market conditions or steady or strengthening labor market conditions? What about inflation, especially given the geopolitical situation that's happening right now, or the geopolitical tensions that are happening, especially over in the Middle East right now between Israel and Iran? This one is going to be huge. You can see it in the market. I'm going to show it to you. I'll also show you what I think we could be seeing for that summary of economic projections when it comes out, so you guys can refer back to this and we'll watch those impacts. Will we see those all-time highs, or will we see us heading back down towards the 200-day for the NASDAQ 100 or the S&P 500, for example? So like I said, I'm going to share that information with you. If you guys want to see more of my analyses, including my technical analyses and my buys and sells, you guys can see that using the link for the Discord down in the description. Code word DOCTOR will get you 50% off your earner tier. And I'm just one of the experts over there helping you in your journey towards financial freedom or building alpha in your portfolio, navigating these markets throughout these tumultuous times. So let's put up the summary of economic projections from March. So this came out March 19th, 2025. So this was 12, 13, 14 days or so before we got the April 2nd announcement, that Liberation Day tariff announcement from Trump. So the summary of economic projections. And then if we go down here, we get the table where they really start to talk about things like what they see coming for the change in real GDP, unemployment rate, PCE inflation numbers, core PCE, and then the federal funds rate projection that they give. And they always give the previous projection as well. So this won't say December when the next one comes out. Instead, what it's going to say is it's going to say March, and we're going to get the numbers updated for June. And like I said, it's the first one since the April 2nd announcement. So here's the first thing that I want to say. I think the key word from Jerome Powell is going to be uncertainty. And I think that's also going to be a sentiment given to us from the FOMC committee members that vote on this. And I think that they're going to likely give us wider ranges when they talk about GDP, unemployment, and inflation, and potentially the federal funds rate as well. And so the big thing that we pay attention to for those wider ranges is, are we going to get directional shifts that give us a better idea of which way they're leaning for each of these categories that we have? So these arrows that you see are what I think are going to happen. And so I will give commentary on that. And I think for GDP, which are these top numbers right here, the first pair of numbers that we have, I think we could see a potential drop on the low end for GDP and an increase on the high end for GDP. And that mixed number, of course, they have central tendency numbers over here. We'll talk about those too. And then they talk about the median estimate that they put out. And they're very careful to say that they are not predictions, by the way. So for GDP, we could potentially see that widening, and then do we get a shift? So it is possible that we see the bottom end of this hold. It would be upward pressure for the markets. I think definitively upward pressure if instead of having up and down for this, or down and up, if we went up on the low end and up on the high end, I think that in and of itself could be upward pressure for the markets, especially if that translates to the median number also going up. And then for the unemployment rate, I think that on the low end, we're probably going to see this jump up to 4.2. There we go. And on the high end of this, maybe up to 4.7. If we go wildly up on this end, I don't think that this is going to be very significant for downward pressure on the markets. I think that this is going to be an adjustment. I will say that as long as this could even stay steady, as a matter of fact, I think steady in the market would be fine with this. Steady, that the Fed doesn't see much change coming here, I think that that would be bullish for markets. I think that that would be upward pressure for markets. If we move up and up on this, I do think the low end is going to come up. I'm less certain that we're going to have that high end come up on this one. So we'll watch and see. If these were both to go down on this, that the Fed says, hey, there's going to be continued labor market strength, I don't think at all that that's going to happen. I do not believe for a moment that we're going to get drops for those estimates for labor market. That's why in blue it has the arrows up. That's what I believe is going to happen, that we're going to see a shift up to 4.2 and 4.7. That isn't necessarily a widening of those ranges for that one, but at the rest of them, what we have for GDP and what we have for inflation, I think is where we're going to see that widening of those ranges happening. And again, I think it comes down to those directional shifts. So if we get the shift up like I expect, as long as it stays minimal, I think we're fine. And I mean like 0.1 for the unemployment. If the high end of this really starts to go haywire, and especially if we see a 5 come out of this, the market would absolutely hate this number going from a 4 point anything to a 5. I think that would be significant downward for pressure for the markets. And if this moved much beyond that 4.2, if that started creeping up to 4.4, for example, or 4.3 maybe even, depending on how the high end of that shifts as well, the market could also see that as detrimental as well. And that would also probably be paired up with drops in GDP. Just my guess there. So for these numbers that we have here, in blue, I do think that lower end could shift down. One complicating factor of us shifting down on the low end of PCE inflation is, of course, and remember, these are actually end of 2025 numbers. I'm not sure if I mentioned it. End of 2025, one complicating factor here for the low end of where they see inflation, we didn't get those higher numbers. So I think it is significant that we see those lowers, that so far the Fed did not get the higher inflation that I was expecting from the tariffs, but the can's also been kicked down the road. So it'd be interesting to see what they say. I think on the lower end of inflation, I think that drops. And I think that the top of this could remain unchanged. And we'll see if it does shift. I think if it does shift up, I think it only shifts up by a little bit. So I think we'll still see a wider range there. And then down to sideways is my base case on this. And then that up is maybe, possibly, potentially, but I don't think that if it shifts up, that it's going to shift up by much. I think we're going to see numbers coming out closer to what we got for December here at the 2.1 instead. So let's move over to the numbers for central tendency then. So this takes out the top 3 and bottom 3 values. So I think we'll see the widening for GDP. For unemployment, I think that 4.3 is going to stay steady. Maybe, if anything, this jumps up to a 4.5. If it goes much higher than that, if that starts to push up to 4.6, 4.7, I don't think that the market's going to like it very much. It actually narrowed in range from December into March. And now since that time, I think we're going to get that widening, especially in face of all the uncertainty that we have. So then for inflation, I think we'll see this lower number drop down, and that the higher number on inflation is going to go sideways. And then how does that translate? GDP, I think it's going to be sideways or up. And then unemployment, sideways or up. I don't see that going down for the end of 2025, but we'll watch. We'll see what they say. And then those inflation numbers, I think the central tendency on these could be that they end up dropping a little bit. And so overall, I think that this could be a very good meeting for us. I'm leaning towards the dovish side on this, that Jerome Powell comes out and it's sort of more of a wait and see approach, if you will. And then it's the hands are in the rest of the data after that to do the speaking if Jerome Powell doesn't do the speaking. So the labor market data, the inflation data, the GDP data. And so then our eyeballs go back to that in order to find a reaction or direction for the markets to go. Federal funds rate, I think staying steady at 3.9 is what we're going to see. I don't think that this is going to change off here yet. And I think that the Fed is going, I think Jerome Powell is going to come out and say, we're still maintaining our stance exactly where we're at right now, that we're ready to move. We're greatly positioned to move in either direction when necessary. And I just don't think that we have the data yet to support that necessity. As a matter of fact, I don't even know that when the necessity arises, that it's going to align with the Federal Open Market Committee meeting date. I think instead, if we do get a knee-jerk reaction, it's going to be an emergency cut to those rates instead. And I don't think that we're in a position to raise rates. I think the Fed is kind of stuck, that it's either stable or down from where they're at right now with the federal funds rate. So with that said, let's go over into the charts. Let's see how the market is reacting as we lead into the FOMC meeting conclusion that takes place on Wednesday. So what do we got here for the markets? We're looking at QQQ and we're looking at the daily chart. And so far showing a little bit of strength, a little bit of uncertainty. So we're right in the middle so far of where we got yesterday for that candle. So we're not wildly up, we're not wildly down. We're positioned to move in either direction. So that actually sounds a little bit like the Fed, but this is what the market does when those highly uncertain times come up, is that it kind of puts itself just in the right spot to make you doubt yourself, to be like, I don't know. So for this one, we're really watching this 5-period EMA. If we get bad news, breaking the 13 is going to be the big sign of the direction that will most likely take following that Federal Open Market Committee meeting conclusion. Not saying that we'll break down through immediately, but if we do break down through the 13, and especially if we get rejected off of it and we see a cross between the 5 and the 13, that direction probably will send us back down to the 50 EMA to find that support, which is on its way up, rising up to catch these others. However, If instead we get good news, you'll see us continue to ride on top of the 5-period EMA. And if we put up the simple moving averages on here for some further information, we're nearing that golden cross moment between the 50 and the 200, where we could potentially see that crossover, and it sends us up to new all-time highs. So we want to hear from the Fed that we continue to be have a strong economy, even in the face of potential tariffs coming our way. That would be a great thing to hear from them. We're still seeing in the soft data potentially some labor market weakness coming our way. It still hasn't translated to the hard data. Then both of those things, GDP and labor market, go into the hands, at least in terms of market impact, into the reports that we get that follow. So the next estimate that we get from Q1 into Q2, and then also the numbers that we get for the labor market at the beginning of July, they're going to be absolutely huge for us. And then PCE numbers that we get at the end of June is also going to be a major moment for us. So we really want to see what the Fed is saying, and then we want to see if the Fed sends us up skyrocketing, we want to see confirmatory data. If the Fed sends us heading downward, we want to see refuting data, refuting what the Fed is saying. So I don't think that they're going to signal anything about recession or economic weakness. I will say that potentially that if we do have that triple top moment, that it is a potential that we go down, we retest support. We have not tested support at the 200 or the 50 since we broke them, as a matter of fact. So if we zoom in on this, there's the 50 SMA, didn't test it out. 200, we tested it for resistance, retested for resistance. And then on May the 12th, man, we just wildly gapped up above it. But like I said, we never came down. We never tested that support. We don't know when that support time is coming, that retest. It probably is sometime in the future, but I don't necessarily know this near future. And like I said, watch for the EMAs, the 5 and the 13. They're going to be the big telltale signs for what to watch for those directions coming. And then I have all sorts of technicals on here. Here's my day trading technicals. Among others, we'll drop down to the minute chart to see what that's looking like. There we go. And you can see this resistance that I have up here, that as soon as we opened up, we skyrocketed right in those, got those high wicks, sold down. So giving that sign of a rejection could follow, it did. We broke back up above, VWAP on that. Once again, retesting that resistance pretty much to the penny. One more test, couldn't break it, and then we had that major fall off, and then catching that 38.2 that's down there, getting those high wicks again, finding it as support. We got our next rocket ship, resistance. So this is a whole floor and ceiling test, and just expect this volatility to continue. This is usually a day trader's market. Yesterday, I wasn't able to catch the market open for trading, much like today. And today, as I'm recording this video, the market's 10:04. So I actually missed the beginning of this, and that's okay. I don't always do day trading every day. I usually do longer term trading, but I do like to day trade. And we'll watch this. As long as we're above VWAP, we're in good shape on this. The reason I wanted to show this to you is that one thing that I'm going to begin doing is putting out my day trading technicals during the pre-market hours so that you can see where the different supports and resistances are. And we can also watch to see where we're finding that support and resistance and respond to it with the trades that we make. Now, mind you, what I put out there is educational, informational. It's up to you to learn about technical analyses, for you to confirm what I'm doing and really see that it really does continue to work and that really is something reliable. If you want to learn more about how to do those setups, there's links in the description. One, of course, is for the Discord. Code word doctor is going to get you 50% off your first month sign up when you sign up for the earner tier, which gets you unrestricted access to everything that's available to the community, not only the expert panel channels. I'm one of the panel experts that's over there at the Discord, but you also get the bread bot. You also get the AI tools, the advanced charting tools. There's live trading. I usually join Stock Mo for some of that throughout this summer, as I'm a teacher and I'm off for the summer right now. So now I get to do a whole lot of stock market work and bring extra news and information to you guys. But you can also check out the other technicals that we put out, including, for example, my penny stocks have been something that people have enjoyed watching those react and to the upside in big ways and in really predictable ways, which really does help out. But like I said, the product services, they're seemingly endless. Just check it out, see what you think, read about it when you click the link and see if you think that it's something for you. And when, like I said, when you use that code word doctor, get you 50% off your first month. You get to try it out for less than $1 a day. And I think you're going to love the community of thousands of members who are already part of that Discord. And if you want to learn more about the technical analyses, the setups, how to set them up, when to trade, all that kind of stuff, including how to use options to really bring alpha to your portfolio. There's coursework through Stockmo Academy down in the description. Bundling the courses is going to save you the most, especially when you combine it with the code word doctor, which works with any combination of those courses. It's a one-time fee for those courses, then you have lifetime access, and it is an amazing way to invest in yourself, to grow your knowledge base, to really help you to be a more impactful trader in the markets, and then also helping you work towards financial freedom for long-term success. So guys, let me know what you think down in the description of, down in the comments of this video about the summary of economic projections. I'm going to go just through SPY and also IWM, give further commentary on those, and then to wrap up the video for this. So let me put this back up here. By the way, it's a beautiful inverse head and shoulders look that we have here. I wonder if we're actually going to push back up to some of these higher levels that we see breaking back through 533. Oh gosh, I'm going to have to wrap up this video so I can check that out some more. Here's SPY, much the same look as what we had. I know that this drawing right here looks like a 6, but it was just a circle. Once again, watch for a drop below the 13 if we're going to head back down, or watch for the price action remain up above the 5 period if we're going to see those new all-time highs. For IWM, let me put up the technicals on this one because I'm resetting the view. There we go. The inverse head and shoulders, if we get a dovish Fed, if we get strength in the GDP, strength in the labor market, low inflation, potentially some more cuts coming our way, that the Fed says that they see it prudent just to slowly back off the federal funds rate that they have, that we get a little bit more cuts, but for good reasons, because the Fed's like, you know, we think it's time that we put in one more. We think that in the very near future, we'll be just peeling off another 25 basis points. The market could love that. The small caps are absolutely going to love it, and we could see that outperformance coming, and maybe we finally see that price target of the 248 coming out for IWM based off this inverse head and shoulders that we have, in which we came down, we retested the neckline and support, and we're trying to figure out probably in the next several days if this inverse head and shoulders gets refuted or if it gets confirmed and really continues to blast off from here. These support levels are absolutely incredible, assuming that we're going to see more bullishness in the markets. So guys, like I said earlier, down in the comments, let me know what you think of this video. What do you think about the summary? Are we going to get hawkish or dovish for the Fed? What about the markets? New all-time highs, or we're going to go back down and retest support for a little while? And while you're down in the comments, stop by the description, check out those links, see the products and services that I offer through this channel to support you in your journey towards financial success. And it also supports this channel, allows me to come back here and bring more news, information, and opportunities to you, and it also helps to support my family. And for that, even just watching this video, I'm very, very grateful for that. Guys, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.